Welcome to the Serene Streams Health Channel podcast, where we empower those navigating divorce with the knowledge and resources to move forward with clarity, confidence, and peace. I am Antoinette Moore, your host, and as someone who has walked this very difficult journey, I know firsthand how overwhelming this process can be. One of the most critical and often overlooked aspects of divorce is understanding the financial and tax implications. That's why I'm honored to welcome today's guest, Peter Salinger, a tax strategist and consultant with the Salinger Tax Consultant. Peter has helped countless individuals understand how taxes impact their divorce settlements and ensuring that they don't walk away from their divorce with unnecessary financial burdens. In today's conversation, we'll be discussing the top financial mistakes people make during divorce, hidden tax traps you need to be aware of, and how to set yourself up for long-term financial success after divorce. So Peter, let's begin with what are some of the biggest financial mistakes people make when going through a divorce that can impact them for years to come?
Oh, well, first of all, thank you for having me. This is my first podcast, by the way, so.
Mine too.
So we're on the same page here. Taxes are a real difficult issue. When a joint tax return is filed, when I say joint, that means husband and wife file a tax return. They're both signing that return. They're both saying that they're going to be responsible for any kind of tax that's owed to the IRS. It doesn't make a difference if one spouse doesn't work or not, or has less income than the other. They're both joint and severally liable for the tax liability. And basically what that means is the IRS can collect from either one of you or both of you. The IRS doesn't care if one pays 90%, one pays 10%, they're still going to try to collect 100% of that tax liability.
Peter, I know for myself, and you, in that you helped to save me during my divorce proceedings, one of the most surprising things that I learned was that the IRS does not care what the divorce decree says about who is responsible for the tax debt. I want you to elaborate on that and explain that to the Serene Streams Health Channel audience, because I know that as you know, we had two attorneys. We had a judge who was a mediator, but she was previously a judge. Everyone in the group assumed that what was in the decree was going to be binding, and that was not exactly the case. I only learned later, once I told you what was going on in that meeting. You explained everything to me, how things look in the eyes of the IRS versus what actually is hashed out in the divorce decree. So if you could explain that and elaborate, please.
That is usually the biggest surprise. I know you were very surprised.
Very surprised.
When I told you.
Yes.
The IRS does not recognize a divorce decree. Most of the decrees that I looked at over my IRS career were either one of two ways. It said that, one, the husband would be responsible for the tax debt, or that the tax debt is going to be split 50-50. And again, what I said earlier is a joint liability, that both individuals are 100% liable for the tax. The divorce decree is a state document. The IRS does not recognize that. So your divorce decree may say that your ex-spouse-to-be is going to pay 100% of the tax liability. An IRS agent comes knocking on your door and you say, well, look, here's my divorce decree. I don't have to pay. He's the one that has to pay. Well, the IRS is still going to try to move against you to collect the money, because that decree doesn't hold weight in the eyes of the federal government. Your only recourse is whatever you may end up paying to the IRS, you can go back to court and tell the judge, look, he was supposed to pay, she was supposed to pay, they didn't. This is how much I had to pay. And then it'll be up to the judge to do whatever they deem necessary to have that person pay the funds to the IRS.
That can be very painful because with a divorce, expenses are mounting, and having the opportunity to go back into the courts only means that you would be in need of representation in going back into the courts. So that's additional funds. And if you're not talking about going back into the courts, if you move back to your attorney and you move to have a mediation with the spouse's attorney, that is all an escalation of expenses, because another unforeseen expense is you're going to have the fee of the mediating attorney as well as the attorney that is in representation of yourself. So it can be extremely costly. That seemingly small piece of information is tremendous in the scheme of things, because most people believe that when they complete a divorce decree, once they have hashed out, once they have agreed to perhaps not take X amount of items in a divorce, in the separation of marital assets, you could find out that you have given up so much, but yet you might find yourself extremely exposed when it comes to an IRS liability that you assumed in trading off items in the settlement that you were no longer responsible for, only to find that you may have parted with your spouse's pension, only to find that you could still get bitten in the backside. Either way, you're either going to be bitten because the liability remains yours, or you're going to be bitten because you are going to again have escalating expenses as a result of the way that the state understands a divorce decree and the way that the IRS treats a divorce decree. I appreciate all of the support that you gave me during my own divorce, but I appreciate you sharing that with the Serene Streams Health Channel audience, because that's my goal, is to empower someone else, because I have my degree from the School of Hard Knocks. So there's that part. Peter, what about innocent spouse relief? Speaking of the spouse coming out on the short end of the stick for something that he or she very well may not be liable for. Could you address that for the Serene Streams Health audience as well, please?
Sure. Innocent spouse is an extremely difficult process. It's extremely hard to prove, but the IRS will give you an opportunity to fill out a form, which is about 9 to 10 pages. It's a questionnaire.
Qualifies for it.
Right, to see if you qualify for it. Then there's an investigation that goes on. You're called the requesting spouse. When you file that request for innocent spouse relief, they will notify the other spouse, and then they could say, they can have input into the process that no, they're not innocent, they knew about this. So they can gum up the entire process for you as well. It's a long process, could take up to a year, and I saw very few cases in my career where the spouse actually got some type of relief.
Could you explain innocent spouse relief for me? Because I understand it one way, but I would like for the audience to understand it the way that you understand it because of your expertise.
Right. Basically, what you're telling the IRS is that, one, maybe I didn't work, I was a stay-at-home mom. All the income belonged to my husband. He said he filed all the returns and paid all the taxes. He gave me a piece of paper to sign. I didn't bother to read it. Turns out that you have a tax liability. So what the IRS is going to ask you is, did you have benefit of that income? Did you live in a nice big house? Did you have everything you wanted? Did you go on vacations? So basically, if you had benefit of the money, they're saying you had some type of knowledge that there was a significant amount of money that was being made. So it's going to be hard at that point for them. Well, you should have known by not asking your husband or your spouse for the return. That doesn't take you off the hook. So, what I strongly suggest to people who are going through divorce or contemplating it is, you're always worried about who's going to get the house, who's going to get the cat, who's going to get the dog, who's going to get the cars, who's going to get the jewelry. We have all these credit card bills, who's going to pay for that and all that. The last thing I've always seen talked about or even worried about was taxes. And a lot of times, one spouse doesn't even know there's a tax liability. Because you didn't do your due diligence, for lack of better words, into what the actual tax return looked like, all of a sudden, bam, you start getting notices in the mail, a tax lien was filed, or worse, the IRS is trying to attach assets like a bank account or your wages. So a lot of times it came as a surprise. So there's a way you can go online to the IRS website and you could bring up your account information. I would strongly encourage you to do that. This way you can see if all returns are filed and if all the taxes are paid. And every year when even if you're not contemplating divorce, if you're filing a joint return, ask to see the return, question it. Was the tax paid? Well, let me see the check. Let me see the electronic transfer. Basically, cover yourself. Because there's even innocent spouses or potential innocent spouses, even if couples are still together, don't divorce. So even if you're in a marriage, you can still have this issue where all the taxes may be his, but you're still going to be liable because you filed the joint return.
That was my experience. That was unfortunately my experience. And I think that especially if it's someone that stayed home, which I did for a while, I think that in a marriage you are believing you're in a relationship. You're not really believing that what's being told to you is disingenuous. So innocent spouse relief, I think the bar is set so high. You have got to be, I don't even know what to say. I don't know who qualifies for innocent spouse. I don't know how many people actually comb through the tax return to make sure that what the spouse has said is actually what is represented or delineated on the tax document. I think that most people find themselves, to your point, not being able to meet the criteria to qualify for innocent spouse. It sounds like an option that's not really an option, because I don't know of too many people that I believe would meet the standard. And you have said yourself, in all of the years of experience that you have, that you as well haven't witnessed many people to have received it. So there's that. Go ahead.
So the more you can protect yourself on the front end, the easier it's going to be on the back end should something happen where you end up splitting for whatever reason.
Do you recommend couples filing separately? Because I think that there's a penalty, right? If you do that, there's a penalty if you are married and you file separately. Is there an extra
kick? It's not a penalty. The tax rate it's the highest tax rate of all the tax rates. So in essence, you pay more tax, but it's not really a penalty. It's a higher tax rate.
And so I'm seeing it as a penalty. But I think overall, if unfortunately, because what is it? You get married in poetry and you get divorced in prose. If you would split with your spouse, at least that you're responsible for what was yours, and then that person would be responsible for theirs. So there's that for someone to consider. That's what I'm thinking.
Right, and especially if the spouse may be a stay-at-home spouse, if you have no income. It may be a better way. It may be a good way to protect yourself. Mm-hmm. I know in your particular case, you were really shocked about what was owed because you kept on being told it's being paid, it's being paid,
it's being taken care of.
To the end.
Yes, that's right. Peter, you right to the end, right? Oh my God.
Right. I think we had to put together information for your attorney to present to the court.
That's right.
And that finally released the purse strings to get it not even fully paid. It was almost paid.
Yeah. There was a check that had to be held in escrow. Remember, $30,000. One of them was $30,000. Yeah. So it's all in what you don't know. It's unfortunate because you want to feel like you can trust your spouse, but unfortunately, life is what it is, and then the IRS has no respect for most anybody. Maybe the top tax bracket, but not for the little people down here.
Right, so the other part of it too is, I guess, you need to make sure you have an attorney that's well versed in all the different facets of it, not just
Peter. That's one of the.
Somebody get you all your money.
Peter, that's one of the things that I offer as a resource to the Serene Streams Health Channel community that I'm trying to create. I have resources because you would assume that the attorneys know that, but what was to my tremendous surprise is that the judge, she was an ex-judge, but she was a mediator, the second mediator that I had to have. She also didn't know. So that's about 4 attorneys in total and 1 ex-judge that did not know that about the IRS. So you are with extreme exposure, and a lot of the attorneys, they absolutely don't know. They were relying on you, my resource. They were relying on you, which is what I would recommend to my Serene Streams audience, is to rely on you, because you and a lot of those legal eagles, they did not know. So moving right along, Peter, what about how do taxes impact, say for example, if a person is living in the marital home during the divorce? How do taxes impact that person that will be remaining after the divorce in that family home? What tax considerations should that person be made aware of, if any?
Well, they will be allowed all the deductions that are related to the home, mortgage, interest, real estate taxes, things of that nature.
So then that's not too bad.
That's not too bad. But one of the things, though, if there's a tax lien out there, that tax lien is going to remain on that property. So if you try to refinance or sell the property, the IRS is going to be there to collect the money.
So how would a spouse who is remaining in the marital home, and that is something that is negotiated in the marriage settlement agreement and divorce decree, how would that person know to go about finding out if there is a tax lien on that property? Where would that come up? How would that present itself?
You can check in the county where the property is located.
So there's nothing in that process that would trigger one of the attorneys to say, or that person's attorney to say, we should have, what would that be, like a title search on the property? That would discover that would disclose that.
Right.
So how would that, what would you recommend? What would you recommend in a case like that for someone going through a divorce? What is it that person should be saying? Is that something they should say to their attorney, or if they should keep their attorney out of it so it wouldn't cost them additional monies in going through that attorney? Should they move on to a real estate attorney?
That's actually something you can do on your own. You don't need an attorney to do that. You can just go to the county website You can look for judgments. Some haven't filed with judgments. Some haven't filed under tax liens. So it's not something that you necessarily have to hire someone to do. The way everything is electronic these days, you can actually just look for the website and do the research that way.
That's really good. That's another good nugget for people to know, because if the spouse has been doing duplicitous things and you don't realize that, and you get the property in the divorce, and you guys have agreed that the spouse will handle other things, but you have the property. If there is potentially a lien on the property, then here again you've been sabotaged. So that's very good to know. Very good to know.
Right.
Take
it one step further. Mm-hmm. You can also check there could be other liens out there. If the spouse owns a business, there could be a judgment out there that's attaching to the house. It could have been an unpaid credit card or other type of loan that could be attaching that there could be a judgment following for. So I don't know whether or not that's something that divorce attorneys automatically do with some type of check and count your records or not. But I would ask that question of your attorney, and if they don't, either ask them to do that or you can do it yourself. Plus, again, you really don't know what's going on, and sometimes when you find out, it's too late.
It's too late with me. Speaking of assets, how do taxes impact the division of retirement accounts in divorce settlements? Of course, that was a part of my negotiations as well. So if you could expound on that for the audience, that would be great. When it comes to retirement accounts and taxes.
If you have to take money out of a 401k to give to a spouse, you're going to be paying tax on that withdrawal.
Right.
And if you're under 59 and a half, you're going to be paying a 10% penalty. So just because the court ordered you to do it, that doesn't negate having to pay the tax or paying the early withdrawal penalty. So, if you take $100,000 out to split the account in half, you may have to take out more than that to cover what the tax liability is going to be.
Yeah. So here's a question then. Should people be consulting a tax expert before finalizing their divorce settlement? And if so, at what stage in the divorce process should that happen?
I guess I would suggest it. Yeah. Because I would do it before it becomes finalized.
Yeah.
Because you have to make some modifications to that settlement.
Exactly.
To account for taxes.
Yeah.
But once the ink is dry, it becomes a problem.
Yeah. Yeah, I'm so glad I asked you that. That's so important. That's so critical in the process or even prior to the process. That's very critical, because if you decide not to go to trial, if you decide that you were going to do this through mediation, which is what they recommend, but they don't tell you about all those additional fees as well. If you decide that you're going to go through mediation, you do a person reaching out to someone like yourself prior to signing or agreeing to finalize the divorce decree, because the devil is in the details, right?
Yeah, there could be some tax consequences that you're not aware of.
Wow, yeah, tax consequences. Like so many consequences. What about your credit? I know that many people don't realize that their credit is still vulnerable during the divorce decree. Divorce process. Do you have any recommendations for how someone can protect their credit while going through the divorce? And what should people be doing in terms of financial planning if they're just starting that divorce process and they want to bring somebody like yourself in?
Okay, well, I don't get too much into the credit part of it.
Yeah.
Credit report, the law changed over the years, so certain debts not going to show on a credit report.
Like what?
It was back in, I don't know, maybe in the early 2010s when they changed some of the credit rate criteria. If the credit reporting agency can't verify the debt belongs to you, then it can't be put on a credit report. And the two main things they use as verification is Social Security number, date of birth.
Mm-hmm.
A federal tax lien will have your name and address. It doesn't show your date of birth, and it only shows the last four digits of your Social Security number. So because that can't be verified, a tax lien no longer shows on a credit report. It will show in the county records though, but it won't show on a credit report. And I think the same is true for some things like hospital debt,
Mm-hmm.
Show your social, it may not show your full date of birth.
Mm-hmm.
So if that can't be verified through those things, then it's not supposed to be listed on your credit report. Which is why it's good to check the county for any type of things, any judgments or liens that may be out there.
Wow. Peter, this conversation's been very eye-opening. Thank you so much for sharing your knowledge on how we can protect ourselves financially during and after divorce.
I appreciate the time.
Yeah, before we wrap up, if someone wants to work with you or learn more about yourself and your organization and your team, where can they find you?
Okay, well, my website is SalingerTaxConsultants.com. My phone number is 813-445-3815.
Say that again?
813-445-3815.
Very good. And is there anything else that you want to advise the audience about? Is there a particular way that people typically reach out to you?
People generally reach out to someone like me in the tax resolution industry when things have gone on longer than I would have liked to see.
Oh.
I usually get there when the mess is happening.
Yeah, okay. So what is so you want to tell them what? That they should reach out to you before things go awry so that you could be a part of the process? Like, what is your ideal situation? Even though I know you clean up messes. I know you from somewhere. So I know you clean up messes, but
Right. People generally reach out to me when the IRS is ready to take enforced collection, take property.
Okay.
And to me, the process then makes it more difficult. Not that it can't happen, but it makes it more difficult because you're running up with certain deadlines. The IRS will send you 4 notices before they're ready to do something like that. So, first is notice if you see things are, happening. If you file and you're that's a good time to reach out.
Oh, if you file, if you know you owe money, you're saying as you file, it's a good idea to reach out to you because you know that you owe them money. You haven't sent the money in with the filing, but it's good to get you involved at that point.
Right. I can pretty much tell you what your options are. And then,
awesome. Options are everything. That's awesome.
Options are everything. There are certain requirements that the IRS has that unless you've worked there or you've done tax resolution,
yes,
you don't know what those requirements are. And sometimes when I talk to these people, not only to help resolve the back tax, but it's to make sure you don't get into trouble again.
Yeah. Oh,
I don't like repeat customers. Not that I won't take your business again, but I'd rather not.
Yeah. Thank you so much, Peter. To our Serene Streams listeners, if you have found this conversation helpful, make sure to subscribe to Serene Streams Health Channel on YouTube and visit us for resources at www.serenestreams.life. And remember, hold on, hope is rising. Thank you.